So first and foremost, traders, welcome to today's second day event on the launch of the ATRVol Trader. Today is going to be an AMA. An AMA stands for an Ask Me Anything. And what this allows me to do is it allows me to be able to go over some things that I think are really important with this algo, as well as just all algos in general. And I want to give you guys some golden nuggets. Give me 1 second here as I turn off my browser. I got some stuff popping up here. 1 second. Just got pop-ups going all over the place here, and I turn things off. My apologies, guys. So today we're going to do the AMA, and what we want to do is we want to make sure that you guys leave here with a leg to stand on, B, profitable templates and a winning system, and C, a whole lot more information that you came here with regards to algorithmic trading and optimizing and testing systems. How many of you guys think that's a good way to start and end the morning? We're going to kick things off. We're going to get right into it. I do need to cover a quick disclaimer, guys, so you guys can just please agree to the risk disclaimer. I can't continue and tell you guys all type of why in the chat box. Want to make sure that you guys agree to this and you accept it and all that fun stuff, yeah? Now, if I don't get to your questions right away, I'm not ignoring you. Please be mindful of the fact I've got a lot of traders in here. Want to make sure that you guys know that. I will go over the chat box periodically, and I will go back to it at the end, but I want to stay on topic, okay? So what we're going to do is we're just going to get right into it. I've got a few things I want to talk about, okay? First and foremost, for those of you that are not aware, we have a Discord. And that Discord is pretty active when it comes to algos. We've created a community, right? We've got, let me just go in here and just kind of draw here for a second. What we've done is we've ultimately created an ARC. There's an ARC section up here, okay? And it just keeps getting expanded on because ARC's a major part of the algorithmic software side of the business models and the company ecosystems that we have. We've got a general chat. We've got a main algo thread, a beta tester group. We got an indicators thread. We got some success chats. We got a webinars thread. We got an AMA thread. And then we get into these algo sections down here, right? Well, some of the traders actually requested that we break these algos down independently because they're all different groups. Like some traders have all of them, some traders have some of them, and each of the systems is literally independent testing, templates, etc. So what we did was we decided to take that feedback, and I think it's just great feedback. So yesterday we opened up the ATRVol Trader, and it's been going crazy already this morning. This is literally since yesterday. Like we literally opened this. I posted my templates here yesterday in the afternoon. And everybody got kind of going. We put the webinar in here, and I just want to kind of go down. There was some licensing stuff that people were asking questions, and all of a sudden people started posting their templates, right? Like, Nikki posted his trades this morning, and and basically, there's another template here. Then there's people here, break trades. People are just posting the trades that they're taking, right? And the second break trade. Now, the reason I like this, and the hybrid is pretty active too, and today was a pretty volatile day, and we're going to talk about volatility and how it affects certain types of systems and when you want to throttle activity versus when you want to be a little bit more sparse with your activity, et cetera, et cetera. And then, there's, so far strong, and then pullback trades, and then people posting their results. And I just wanted to show you that this isn't me, or this isn't our staff. These are our customers that are using the software, that have purchased the algo since yesterday. These are his results today off of 2 contracts, right? And people are just posting things. And I'm just showing you this because we have this for many of the automated systems that we have. But I think it's important that you understand that it's a community in here because everybody is literally helping everybody. And I love that about the algo, right? And how many of you guys would agree that it's a good community? It's getting better. I mean, you weed out some of the bad apples, and you get a few naysayers and some complainers, and usually it's just a lack of experience or laziness. People just start not really wanting to get involved and roll up their sleeves. But when all that noise gets canceled out and all of the winners are around, it's it really starts to see, you start to see all that success start to breed, and everybody starts helping everybody, right? So What I want to do today is I want to invite you into an opportunity. After today's AMA, we'll give you the discount on the launch pricing for those of you that are still not sure about the system, et cetera. Hopefully today we'll give you some insight as to why it's an amazing product and what it does. But more importantly, I want to talk to you a little bit about stuff that I think everybody can benefit from. So I've got two charts here. I've got a retest chart. So the chart on the left is all of the trades from the retest algo today. A lot of movement today. We had CPI, right? CPI, it's like we had the day before, we had literally a 3-point move, right? And today, look at the volatility from today. Now, this is exactly what we're talking about. Volatility, right? So depending on the market that you trade and depending on the templates that we build, will determine the setup that you want to use. The one on the left is what we call a retest trade, okay? And a retest trade is where we take these volatility bands, and when they break, okay, let's use this as an example. When you have a volatility band that breaks, a lot of times it'll just go straight down and it'll create a great break trade, give you a momentum push. But a lot of times it'll break and it'll retest and it'll hit here. Now, why do we have this band here? Well, this band is it's like a force field. It's like an energy field. You know, it's kind of like every human being has an aura. You don't see the aura. You know you're an energy being. We're a spiritual being having a human experience is apparently what the new concept is on the street. Well, just imagine this is a spiritual area around this level, and it's a frequency environment. Exactly, Bradley. There's a frequency around this volatility line. And it's really based on standard deviations. It's a mathematical concept, which I love because I love math, and I think quant trading has a lot to do with math. And to kind of sum it up, we can test to determine how big you want these bands to be and what size you want these volatility settings to be. And I think this is fantastic because now you're not sitting here saying, well, what's right? Well, what you use for crude oil versus the NASDAQ versus the S&P is going to be completely different. They have different behaviors. They have different movement. You can't treat them the same. They're literally different animals, right? But you also have the ability to control how many trades you want to take. Like there's a 1 retest, a 2 retest. Why didn't it take the 3? Well, we have it set to 2 retests, right? And if you think about that, like think about wave theory when you kind of think about it. Like when you go for a wave, impulse 1, pull back 2, impulse 3, pull back 4, you normally have 5 waves in a rotation. So by definition, if this is a trend on a smaller time frame, normally it's going to break concepts after 2 pullbacks, which is why I've suggested a 2 pullback minimum or a maximum on this template, just to kind of lend itself to, right, some concepts of wave theory. Now, I could have taken a whole lot more winning trades here. I have it shut down here, right, going into the US or the European close, but there was a setup here, there was a setup here, there was a break trade here, there's this. This is a scalper's paradise. However, today we had a lot of movement. Yesterday we didn't have a lot of movement. We had 4 trades yesterday. Let's go into the last 2 days of trading the system. We had, this is just for 2 days, okay? There was 4 trades yesterday taken. Okay. Let's just go in here to trades. Let's pull this in here. Daily. And let's go in here to net profit. Okay, bear with me here. Yeah, let's go down here. So these are all the trades that were taken. Okay. Now there's a bit of a drawdown here, but that doesn't mean it was a good or a bad thing. It just means that there was a bit of a drawdown and they came up, right? And so when you look at the concepts around yesterday and today, right, there's a lot of activity, right? A lot of activity. Now, max consecutive wins, 12 wins. It's pretty darn good, right? So, I mean, this is 2 days. It's not a sample size you can stand on. It's not some back test that you'd want to just marry. But I have a sample size for this template, and I'll run that with you now so you can understand we did this yesterday when we pull up the strategy analyzer. We ran this test yesterday with over a 3 profit factor, and his system crushed it today. Like it just was amazing today. So when you look at, you know, if you're going to trade a strategy, let's run this test. Load, retest. So I'm going to try to run it to yesterday because I don't have enough data. They don't let me download data from during the market session. It's just, it is what it is. It's life on life terms. So we'll run that for a month and a half. We'll run that back test. And then I'm going to show you how to run and build a test on a different, on this market and look at different scenarios, right? Because what's really unique is I want to teach you how to fish, right? I can give you these templates. This template was provided yesterday and everybody ran this template and did very well today, right? Why? Because I spent a freaking month building these templates, right? It wasn't just like, hey, Sean, create a template. Like I really, well, you can trade 1 contract, you can trade 2 contracts, trade whatever you want, right? Like this is trading 2 contracts, right? And this is the entire month. Okay. Okay. Yeah. So the traders today were trading evals, live accounts on that. Yeah, Ron. So this is essentially 1 month of this exact same template, 140 trades, 90. Now the risk reward, if you weren't in yesterday's webinar, don't comment on things that were in yesterday's recording. Please go back and watch yesterday's recording. This is an AMA. If you weren't in yesterday's event, just kind of sit tight, watch the recording, come back with questions later. I don't want to just kill time on stuff we've already talked about yesterday. But what I do want to point out is that this is even better because this isn't including today. This isn't including today. Today's the 10th, right? We have not added today's metrics to this. So it would have been a whole lot better as of today. Okay. So why am I showing you this? Well, because I want to show you how I built it. I want to show you how to fish. We'll go in and we'll take a look at some of this stuff. Well, you can do whatever you want, MJ. I mean, everybody normally will test the template out in Sim before they start running it on an eval because you want to get things kind of comfortable, right? But let me just kind of walk you through how to do this, okay? So what we're going to do is we're going to go through the strategy analyzer. And I want to walk you through how to build a winning template for these trade setups, okay? So let's take the break. Let's run an optimization. I'm going to teach you how to optimize this template. Okay, this is really what I want to do is I want to teach you how to fish. So I'm going to show you how to optimize the break trades, and then we'll optimize the retest trades. And I'll do a step-by-step process as to how I create the templates that I trust. So we're going to walk through the engine 1 step at a time. Okay, we have a break signal. I'm going to turn this to true. I'm going to turn off the retest signals. Okay, so we're going to turn off the retest signals. And Jeff is here in case I decide to fall asleep or make a mistake or whatever the case. I just work here. All right, Jeff, if you want to introduce yourself, come on the mic, my friend. Jeff is a major part of all this. I know he's very quiet, he's very humble, but he's like the foundation, right? Like he's a Jedi master. He's like a Sith warrior, if you know anything about
okay, tap the break, Sean. Come on now.
Yeah,
I'm here.
Yeah. So here's what we're going to do here. We're going to go down and ATR period. So ATR period, okay? This is the period for this ATR line, right? Now, if I make this period bigger, it's going to make this period much bigger, okay? Let me just grab an indicator chart so I can show you how this works. I'll just add a chart here for a second. I really want you to understand, if you're going to trade something, you should understand how it's working. So if I go in here and I add the indicator, the foundation to this, it's the trailing stop logic. Okay, I'll turn off these bands. Okay, now watch what happens here when I change the ATR period for the indicator. I just want you to watch how this works. If I increase this ATR to a 4, it's going to make those lines bigger. If I increase this to a 5, it's going to make those lines strong. You see where I'm going with it? Now you can see the difference. You're going to catch the micro breaks, the macro breaks, the pullbacks, right? Now watch what happens when I change the standard deviation band around the volatility analysis. I'm going to go in here, I'm going to increase this to a 2. I'm going to increase this to a 3. Right? How do you know which one is best for each market? Well, that's the best part of having an algorithm. You can run those types of tests. So what we're going to do is put this over on the right here and keep it out of the way. Is I'm going to assume we're going to use the 14 period ATR because that's the standard baseline. Okay, we're going to use the 14 period, which is the standard setting for most ATR periods. And then what we're going to do is we're going to decide, am I going to use, I don't really normally go less than a 3 ATR. And I normally don't go over a 10, mainly because it gets pretty large. Like if I start doing a 10 ATR on this, like I'll show you how big a 10 ATR would be. Right? If I open this up and if I draw a 10 in here, you're going to see that you're going to get these really big macro trends, but you're not going to get a lot of these pullbacks depending on how big that volatility band is set. So I normally will set this maybe to a maximum of 7, just depending on and you can see the price action here is this. It's pretty solid when you look at how it's reacting off that volatility environment, right? When you see this, you know, it reacts really nicely in those volatility bands. So you can see the opportunity on that movement, right? So this is why before we say, okay, well, I'm going to set it at this and I'm going to set it at that. Okay, let me just, oh, I got something popping up here. Something's not allowing me to do something. It's not letting me, there we go. Once I do that, I set it to say 5, you're gonna see it break. It breaks, and you get these volatility breaks. And what happens when you set these volatility breaks like this too small, it's not a good setting. It's not the right setting for that market. So what I like to do is I like to test that. So how do we test that? Well, we can test it anywhere between a 3 and a 7. We can test it in increments of 1. And this volatility band, I always set it to 50. Why? I just trust me when I say this, set it to 50. And you're gonna appreciate it because it's not choppy. And this band multiplier, I'm gonna set it between a 1 and a 2. I'm gonna set it between a 1 and a 2. I normally don't set it above 3, but I've just found the sweet spots between 1 and 2. Now, what have I done? I've just basically told the algorithm engine, the engine that my team and I have built, which makes all of our algos so great, is we've told it how to test the system for best settings. So when you say, well, what about changing them? No, you don't need to change anything. If you're trading crude oil, or if you're trading the NASDAQ, or if you're going in and you're trying to, I guess you would say, find the right sweet spot for gold or whatever you want to use, rather than guess, reverse engineer one day at a time. And this is how I'm going to teach you my sweet spots here and how I do this and how we go about finding templates for all the systems. I normally will go with 1 contract. You can't go less than 1 contract, right? So I would start with 1 contract, because once you see the statistics, you can scale size based off your drawdown amount, your average trade risk per trade, these types of things, right? Always entering at market unless you want to do limit. These types of things I leave. Now here, this is interesting. This is really interesting, because the way I set this template up, I want to teach you guys a little bit about the engine. If you look at the stops and targets, I have it set to ticks. This previous template, I have it set to ticks. You can set the stop loss in ticks or in ATR. Well, since we're using a Renko chart or a range, the ATR is fixed, right? So if I'm using like the Renko bar is 10 ticks reversal, right, on this setting. So that's normally going to be is a 10 tick range. Like the bar's ATR is about 10 ticks, give or take, because the bar sizes are 5. reversals are 10. So it's going to take the average ATR of this and it's going to start working off that. Now, what does this mean for how we're doing this? Well, I can set it to ticks, right? But let's say you didn't want to set it to ticks. You wanted to set it to average true range. You could do that. You just need to know what your starting range, your ATR is going to start with. And for me personally, it really just depends on your preference. So I'm going to go in here and I'm going to show you how to set this up here. You can set the stop loss to an ATR or ticks. If you want to set it to ATR just for the purpose of this example, you can. I'll show you here. And here's something that a lot of people don't realize you can do is the average volatility of a 5 to 10 tick Renko bar. You'll watch this. You're going to see here is the minimum stop loss is going to be 1 ATR to, let's say, 3 ATR. Let's just use this here. So basically, if 1 ATR is anywhere between 5 to 10 ticks, 3 ATRs would be, 15 to 30. Just depends on whatever settings come back. You can go in increments of 1, or you could do increments of 0.5R multiples, right? You could do that. Let's just keep it as 1 for this example. And then we'll go in here and we'll set the targets. Now, this is why I love our engine so much, because a lot of traders, they're trying to test for ticks. Well, you can also test for risk versus reward multiples. For those of you that are stuck on that, right, and you love it, you can basically test for that. So let's go in here and let's do the target. Let's uncheck the ticks and let's do a risk reward target. So let's say you want to start taking profit targets, and this is now RR multiples. Whenever I have this set to an RR multiple, you can now choose what's your risk reward ratio target. So let's say I want to start with a 0.25 target. For those of you that are super big scalpers, like these templates are, and let's say I'm going to go for a maximum of 3 to 1. And I'm going to go in increments of 0.25. Well, that's going to give me a lot of iterations, right? But if I'm only testing a small set of sample size, that's the whole point. If I'm going to increase a lot of iterations, only test 1 or 2 days, it's going to give you a foundation. It might allow you to drop your ATR settings down a bit, these types of things, okay? Now, for those of you that are trading the S&P, you're probably going to want to test the US session. So I'm 3 hours earlier than Eastern. So I'm just going to use this, and that's 5 a.m., which is 8 a.m. Eastern. Okay. Now, if I'm going a little bit too fast for you, this is being recorded. Trust me when I say this is why we call these AMAs. We'll get through it. The end time is going to be 1300 because that's my 1 o'clock. And that's 3 hours before the 4 o'clock bell. If there is a bell at 4, I think. Yeah. Exit at end time. Yes, because if this is ending at the close, I'm going to exit at the end time. If I was entering, let's say I was trading mid-morning, I wouldn't necessarily exit at end time. I could let the trade close when it closes. Now, I'm not going to test money management in here. Why are we not going to test money management right now? Anybody here with a little bit of experience coming in from the prior events we've done? Why do we not test money management now? It's individual. Exactly, Brian. Plus, we don't have a system yet. We don't have the template set yet. We don't know whether we should be even applying money management. We don't even have a signal yet that's showing us the right settings. So we will leave this exactly. Now, we're not going to test higher time frames right now. Okay, we're not going to test higher time frames right now. These moving averages right now, it's why it's set to false. We're not going to test using momentum filters right now. It's not necessary. Let's go in here. Okay. Now, I have data downloaded all the way up to yesterday. I don't have data from today, so I can only test over the past couple days. So if I go to the S&P, okay, I'm going to basically go in here and change my template. Right here to the bar size that I would like to test. Now you can test other bar sizes. We have a fractal conversion document, which I can give everybody here. Jeff, do you have the link for the fractal conversion doc? Can you pull it up? It's in the members area. want to deviate here right now if you could find it.
I'll find it. I'll find it.
Thanks, brother. So now here's the kicker, right? Like, I'm not trying to test January. I just want to test like Monday and Tuesday. Why? Because I just want to start getting some type of a foundation. Maybe I'm not even able to test that much data. We'll have to see how many iterations we have. Okay. But I'm going to include commissions. Now here's something that you can do. Some people don't do this, but they don't test for certain. I always fill limit orders untouched. And ultimately, if I'm optimizing, I can optimize for net profit, max net profit. I don't have to optimize for profit factor. I can optimize for max net profit and then search for the smallest drawdown and the best profit factor. Because if I'm like, what is your goal as a trader? Like, these are just different ways you can run testing. Are you trading for a profit factor, or are you trading to make as much money as possible while limiting your drawdown? Normally, when you have a smaller drawdown with a higher profit, you're going to have a good profit factor, but it all depends on your win rate. So for me, first thing I'm going to do is try to make as much money as possible. How many of you guys would agree that that's a good goal? I want to make as much money as possible in the markets. Anybody here have a different goal? Right? So it's safe that we're all aligned. Perfect. So, and I'm going to keep the 100 results. Drawdown is very important, but if you optimize for net profit, you can sort by max drawdown, and you can see that if ran. Well, you'll see here when I show you. So what we always do, exit on session close, and then we're going to save this template. So we're going to call this ES 5, 10, 4, retest AMA 1. Because it's the first round of testing. Save. Now, I don't know how many iterations. Maybe it's too many. We'll have to see, but I'm going to give it a shot here. Take a look, and let's take a look at this. 360 iterations. Not too bad, actually, considering, right? We're only looking at 2 days. So did everybody kind of learn something on that? Before I start assuming that everybody understood that, and, you know, while that's running that optimization, take a look at this. Give it a second here. Ninja Trader is using my resources, so we just got to be mindful of that. Like the 7, I like the 7 on these big days, just mainly because you get these big movements. Now, I'm gonna give you a golden nugget. How many of you guys would like a golden nugget? Like a gem, you know, like when a Jedi passes down something that, you know, it's kind of, most people don't think about. Okay. So does anybody in here have a website that will tell them all the major news announcements for the month, but on a monthly scale? Like, where would you suggest we would go for that? Anybody in here? I just want to see if anybody has any. Maybe they have better resources than I do. Forex Factory. Now, here's how hedge funds and big firms think. I'm going to talk to you a little bit of like a little golden nugget here. Like, let's say you were managing $10 million and your job was to make as much money on the fund as possible. Do you think they trade every day? No, they don't. But they know when they need to throttle things because they're expecting things to happen. They need that movement, right? So if I go into, say, like forexfactory.com, okay, only when it lines up or only when the market gives roaring opportunity. So let's take a look at the calendar. I don't know if this gives me a monthly view. That's the issue. But what I can do is I could go in and I could take a look at this month. So let's just take a look here. All of these red announcements are pretty powerful things. Yeah, like they're pretty significant. But there's some pretty big ones that matter the most, like ISM. right? Jolt's job openings, right? FOMC, you say, well, I don't trade FOMC. I say, why not? Why would you not want to trade FOMC if you have at least given it a minute after the announcement comes out, because that's where the slippage comes from. And then all of a sudden the market starts winding up like a top, and you just let it go and it just starts moving. Think about this. If your systems are built on big movement, volatility, things like that, wouldn't it make sense for you to be prepared to throttle that? Now, that doesn't mean being careless and saying don't trade into news all the time. But if your system is designed to trade the big movements, wouldn't it make sense to be building a schedule to say, okay, like if I go into the day and I don't have any movement, like today we've got nothing here. ECB press conference, nothing. Like these are not major news announcements. You cannot ascertain what's going to happen there. But non-farm payrolls, you can definitely, unemployment rate and non-farm employment exchange, these are big movers. Nothing on the Sunday and the Monday. Today, CPI, big day, right? Right? This is really, really important. You can also go up here and you can filter, right, by I only want these. And if I'm only trading in the US session, I can apply that. And there it is. So Monday, Tuesday, Wednesday, Thursday, Friday, it's a pretty busy week at these times, expecting some volatility, right? What about yesterday? Do you see anything yesterday? Holy shit, imagine that. What happened yesterday? How many of you guys nearly got crushed watching the paint dry? You guys understand where I'm going with this? Thursday, you got back-to-back CPI. Right, but it's not torture, Nikki. If you know what you're looking for and you say, I don't want to trade anything on those days, you could take Monday off, go golf and do something, because you know that you're going to run the algo and throttle it, because we're going to test. We're going to test the settings properly. And then what you do is you throttle the systems on these days. Like you don't look at Sunday, Wednesday, we don't trade. Friday, we don't trade. Like all of these big announcements are opportunity that you throttle. Who else do you think is trading on those big announcements? What do you think's happening? These are fundamental catalysts, right? So if you expect movement on fundamental catalysts, what do you think's happening today? We have fundamental catalysts. What do you think's, this is a day trader's paradise. Yes, they do, Ifran. Yes, they do. And if you're trading, if you're in a prop firm that doesn't allow you trading into news, you're trading with the wrong prop firm. We have prop firms that allow it. So I would suggest getting in touch with our team. We'll get you set up. We get you set up. Now, I'm not saying you want to trade every system like that. This type of system, yes. Why? Because you're not sitting there trying to, like, let me give you an example. If you're sitting there trying to extract information that's going to happen on that one single bar and you have a tight stop, the outcome of that working is very difficult versus waiting for big macro scenarios to happen, like breaking these big volatility infrastructures. Like these are really big inflection points. For the market to break that, things need to happen. And if you have it set large enough and you wait for those volatility days, that's where you're going to have a sweet spot. Okay. Now let's go back into this optimization. So this is what it came back with Monday and Tuesday. Okay. Now I don't have enough data. I don't know if I can't get data for today. So it's an unfortunate reality, but let's just go into what happened here. Yesterday. Okay. The day before that, yesterday was tough. We didn't have any movement, but that's okay. Maybe what we'll do is we'll go back to the prior week and show it. But I just want to go into the chart for a second because I spend most of my time looking at this before I look at any statistics. I just want to get a visual cue as to what does it look like. Okay. Well, to me, you can see that the settings on these ATRs are very small. You see how the settings are here? Like you can see how it breaks a lot on every side. It's a little bit of a tight, and that was yesterday. I think what we're going to do is we're going to go back one more week. I want to go back one more week. Okay, we're going to go back there. And I just want to see right in here. What I do is I'll open this up and I pay attention to these numbers because these are the settings that I'm paying attention to. So I'm going to pay attention to those numbers right there. And what is that? What am I doing? Right. Well, I'm looking to see, you know, where was most of the test coming back, right? Was it 3, 4, 5, 6, 7? And was it a 1 or a 2? Those are the two things that I'm paying attention to right now. Okay. And these are break signals. These aren't retests, right? So what I'm going to do is I'm going to show you that these were based on break signals. So if I look here, it's a 3 multiplier. You can see all the 3s coming down here. There was some 5s, there was some 7s. So there was a 3 to a 7. So I think it's still too small of a sample size for me to assume a setting yet. So let's go back here and let's optimize it over a couple days. Okay, let's do this. Same amount of iterations. Okay. Now, there's a few things that you want to pay attention to with this type of a system. And while that's running that optimization, and while it's running that test, okay, what we're going to do is I want you to think about this for a second. If you're trading this type of a system on really big market moving environments like today and the other days where you have a lot of volatility, you can set it up to capture the large runs. Now, I know a scalper doesn't want to do that. But if you're trading the system on large movement days, these are the days where you can get that out of the market. Does that make sense? Like if you were trading with bigger objectives only on days where you have big expected movement, now you can understand you have fundamental catalysts helping a technical concept. Does that make sense? So you're not going to expect a break of an ATR and follow through on a non-volatile day, right? And you're most likely not going to want to just only scalp little teeny chunks if you're able to see that the system is producing really big runs. You won't see these really big runs if your ATR is set too small. Your ATR needs to be set large enough for it to be able to give you, because what would happen is you would get a break here. You would see a break here, would probably break down and then break back up and you get chopped around. Okay. Now I believe that, you know, you will get your ass handed to you if you're trading break signals in choppy, slow, non-movement days, which is why I think there's some magic to be had when you have two types of templates. And being able to look at the schedule for volatility and say, today, I'm going to trade the scalp templates. And then on the big market movement days, I'm going to trade the volatility templates. And I think what we can do as a team and as a community for this system is the goal should be to build a scalp break template and of a volatility break template. Because if you think about it, you just use one. You can look at the schedule for news. You can look at the fundamental schedule for news and say, oh, today I have no major catalysts. So today I'm going to implement a scalp template. And then on the days where you can expect big movements, you can turn the volatility template on. And the same goes for the retests. Does that make sense? Now I've already built scalp templates. Like I already have scalp templates made. Like you don't need to worry about trying to reinvent the wheel. I've done all the heavy lifting for you. So for those of you that are in here and you're learning, that's the whole point of these workshops is I want to teach you to use what we've built, but I also want to show you how to do it so that you can feel confident in building it for yourself as well. Because you might want to do this on a different market. Does that make sense? Now, another thing that you can take a look at. Is there any setting in this that will keep a trend following runner open? Absolutely, Ross. Yep. So when you look, I'm trying not to click too much on the chart because it's optimizing last week and it's only got 5 minutes. So I'm normally not going to optimize a much larger sample size, but I think it's enough for us to do in this type of a workshop. Inside of the engine, there is trailing stops, there's automatic break-even triggers. You can ultimately scale out 3 exits. Absolutely. Yeah, all of that is part of our core engine. And our core engine, if I'm not mistaken, are we doing a training on that, Jeff? When do you guys have that set up?
It's Friday.
Very important. Yeah, very important. Very important that everybody that has an algo goes to that training, right? I think it's critical. Yeah. So a couple things I want to point out is, you have to decide how you want to run your business. Okay. So let me give you an example. When you are, well, maybe you can tell me this. How many of you guys are in prop firms right now? Evals. Trading for a prop firm. Okay. Can you guys write the name of the prop firm that you're with? Top Step, One Up, Apex. Okay. Take Profit. Okay. So there are companies out there that allow for end of day drawdowns. And when you use an end of day drawdown, you can trade for high win rates or low win rates and big R multiple settings. Okay. So when you think about it, if you're trading for Apex, I'll show you what I mean by this. Apex and mostly all prop firms have a trailing drawdown, with the exception of a couple. So if you're trading for a prop firm and this is your starting balance, okay, and you have your max drawdown, okay, this end of day has intraday daily losses, so it's not a win. Well, hold on a second here. I'm gonna show you a few little things here, and we can learn something. If your max drawdown, let's say, I think for the 50K account, we'll just use a 50K account for this example, is I think it's $2,500, right? You got a $2,500 drawdown. Everybody with me on that? So let's say you take a trade, boom, and you have a target here, T1, and it goes in your favor. And that's your drawdown. And this moves with it, right? Peg for peg, moves with it. And then all of a sudden you come back and you hit a break even. In your mind, you're like, well, that wasn't so bad. I didn't lose any money. Because psychologically, that's what we would think if we were trading our own bank accounts. But to a prop firm, what they're saying is, well, this guy doesn't know what he's doing. He just had a profitable trade and he gave it back to the market. So what they're saying is like, we're going to use a trailing drawdown. And I actually believe in a trailing drawdown for the purpose of if you were a risk manager running a firm. Like, think about this. Your job is to find the best of the best traders, right? And if you use a trailing drawdown, this type of a concept works in the favor of both the trader and the firm until the trader understands how to manage risk. If you know how to manage risk, a trailing drawdown should never be an enemy to you. But you also need to be mindful of the fact that if you're trading for targets here, right, versus targets here, they both could be very profitable systems, but maybe not for what your objective needs to be. Now, once you make a certain amount of money in the prop firm, and once you've passed that trailing drawdown threshold and you've built that buffer, then you can open up the liberalization of how you want to manage 1-to-1 or 2-to-1 or bigger trades, right? And so why am I explaining this? Well, because depending on how you set your templates, okay, as much as you may want to capture that sexy trade, capture those trades. If you're trading in an Apex account and your goal is to get funded and not breach your trailing drawdown, what do you think the mindset should be with building an algo? Like, let's move out of what you may be thinking is right versus being mathematical. What do you think should be the objective? If we're going to tell a computer, okay, I want you to take these trades, I'm going to program the computer to robotically trade the market, and then ultimately extract a profit based off 1 + 1 = 2. Minimize the drawdown, minimize the exposure, but it still needs to be very accurate. Like, you still need to be able to objectively hit your quota, so to speak, while being in the market for very small periods of time. Exactly, base hits, Bradley. And I don't like to beat a dead horse, but if you know the game of baseball, you've got home plate, you've got first base, second base, third base. Statistically, if you were to study the stats of the baseball industry at large, the teams that have more first base hitters that get onto first base, more games are won in baseball by the team that gets their player on first base, and then they get to second base because they can steal and they can home plate and they force the guy home. Sometimes you'll have the bases loaded. Sometimes you'll have a guy on second or a guy on third or whatever. But the majority of all games are won by base hitting the game. And so when we look at trading, sure, you could have that big trade, which is not wrong, and you shouldn't try to build a template. But you need to ensure that you're trading the system on a day that it's going to give that to you. And you also need to understand that you don't want to be doing that when you're still trading with an intraday trailing drawdown. So my objective would be that even though this is happening, okay, what is also happening? What do you see that is also happening? Retests, real quick scalps. Now, which trade is better, the scalp or the big trade? Well, if they both hit the profit target and that's what you set them up to do, then they're both exactly the same, because it's all a matter of capital at that point. Does that make sense? So I'm just trying to get you to start thinking like a quant trader versus thinking like a prop trader. Prop traders are not really what you guys are. If you're here to learn an algo, your job is to learn how to be really good with the system and set it up properly. And if you know what you want the system to do, you can be very, very, very successful. Okay, now that I've gone through that, let's kind of go in and take a look. Okay, now let's go in here and let's just take a look. I've optimized for net profit. I haven't optimized for profit factor. I haven't optimized for anything. I haven't optimized for drawdowns, nothing. So if I sort by profit factor, look it. I can show you that even though I've optimized for net profit, I can still show you that I'm coming back with a really decent profit here with a very small drawdown, decent size hit rate, right? And that's all last week. So that was all last week's trading. Okay. And so let's just kind of go in here for a second, because look at the win rate. This is a 2-to-1 R multiple on this trade. Remember, these are break trades. So these are not retest trades. That's a 2-to-1 R multiple with a 40% success ratio, which is exactly what you need to be profitable. You need to be right 40% of the time, right? But take a look at the size of the drawdown on that. It wouldn't really make sense to do something like that, because that's not how prop trading is designed. Which is why I would sort by profit factor after optimizing for net profit, because it's going to find the highest profitable scenarios. And then I can also sort by the lowest drawdown. Well, I'm clearly not going to try to trade. If you take a look, you can start seeing what I normally do. And this is how I normally do this. I will normally sort for profit factor. And then take a look at the size of the drawdown. Take a look at this. Like this one here, we jump 3,000 to 1,700, 4,000 to 1,700, only for the sake of a $600 difference. So what I'm saying here, and this is something that you should really learn to look for in studying the data, is if I'm sitting here, let's just round this to 4,000 and change. That's at 4K. But I've given up 2K in profit only to sacrifice $600 in drawdown. To me, that's not a fair trade-off, which means I will always trade the higher drawdown because I'm making way more money to my drawdown ratio. Does everybody understand that? So I would look at this template as being much better than, say, the one down below it. Even though the drawdown was smaller, it doesn't mean the template's better. So let's go ahead and take a look at that. It's the highest profit factor, which was telling me that it's giving me the best profit for the decent drawdown with a good win rate. It's 1.2 R multiple, 60% success ratio, which is very, 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 very good. Okay. Now, yesterday was a losing day because we didn't have any movement because this is a break template. Remember, this is a break template. And normally you're not going to have really good follow through on break trades on low volatility days. Today, if you traded the break template, you would have made a killing. If you look at today's price action, take a look at the break trades. You would have been able to take these in big directions because you get the movement. 100% winners today on breaks. Exactly, Nikki. You may use the top one with less contracts. Yeah, you could. But let's just go into the chart. I like to study the chart. I want to see what it looks like. Okay. Let's go back to last week. Right. Now, this is basically set up for just last week, right? Let's take a look here. Big run. That's the overnight. Okay. Now, like I said, you can go for this, but it doesn't necessarily mean you should. Okay. And that's why I've built a break template. We'll just save this optimization for the purpose of just showing it to you. This break template here this is a scalp break template. I'm looking for like this, like all I care about is that, because this is a scalp template. And if it's going to break that size of an ATR, the likelihood of it doing something with the momentum is very high, which is why I have a tight scalp. But you say, well, why is the ATR set so big? Because I set it that big on purpose. Because if it breaks that big of an ATR, almost always, you're going to get a reaction on high volatility days that are going to blow right through it with a lot of follow through. And that's just understanding the system, right? I don't want to be chopped around in breaks all through here and here and here and then never get any follow through. I don't want a lot of breaks. What I do want is I want to have a break trade on high volatility days with a very, very high degree of accuracy. And this template came back, I believe, with a 2 profit factor with close to an 80% hit rate. Yeah, we studied those tests yesterday in the event. So let's talk about the settings on this, right? When I look at this optimization, what I wanted to do is show you how to optimize the settings. So what I would do is I would go back in here and I would this is how I reverse engineer big sample sizes of data. If I look at the data here, it's a 3 multiplier and then it's a 7, 7, 7. So it really depends on, are you going to sort by net profit and then look for a higher profit factor? Or are you going to sort by the profit factor and then look at the settings? Because technically, normally when you sort by profit factor, think about this. I'm trying to get as many high profitable days as possible, which is why I've optimized for net profit. But once I've optimized for net profit, I can go into that data and sort by profit factor. Why would I want to do that? Anybody here think about that? Like, why would I want to sort by profit factor? Because profit factor is normally a gauge of your expectancy combined with win rate to draw down to profit. So what it normally tells you is that it normally ranks your template or your strategy settings based off of how much money you've made versus how much drawdown you have and the win rate assigned to that, the expectancy of that. So I would normally sort by profit factor, and then I would basically going in here and say, let's see, 1, 2, 1, 2. So you see how I have it set to like 1 or 2. I will still leave it at 1 or 2 because I always do. And because it's just, it gives me a little bit of you could even go to 3. But on a break trade, you know what, Jeff, that's see, mistake on my part. We don't even need to have this set in here when we're not testing for the retest. So you don't need this. This was my mistake, guys. You don't need the band multiplier for the break trades. So let me just kind of fix an error I made earlier. It just adds to the iterations that don't even need to be run. And so I would literally just put this to like 1. It's not necessary. It's not even going to optimize for it because you're not optimizing for the band. It's not a retest trade. So cut down your iterations and just optimize for the volatility on the breaks. Make sense, guys? So we'll leave it as 1 and we'll run that now for another sample size. And let's make it a little bit bigger. Way less testing. Let's go back another week. Way less testing. So I got 180. And I'm just trying to show you how to reverse engineer the testing so that when you want to do this on a different market. Now, a lot of you guys, do we have any templates built already? Yes, absolutely. You can have them. I'll give you this template here as well, and we can test the retest. Okay, let me just close this down. And that'll cut down a lot shorter because we don't have a lot of iterations. So let's take a look at today's price action on the scalp template for a second. Give it a sec here. When you set up the scalp templates, you can set it up to how many retests you want to take. Okay. And before you decide that, I would essentially test for that, right? You want to test for that. And so you can do that when you go into the optimizer and you go up here to the settings, you can actually test for number of trades. Once you enable this, it'll tell you how many trades you want to test for. Okay. Now I've actually ran tests on bigger time frames. Why would I want to run tests on bigger time frames? Well, because there's some traders that want to test other different concepts. And if you look at like testing a 5-minute chart or a 30-minute chart or a 15-minute chart, because this is a volatility based system, it will ultimately, you could test it on anything you want. It doesn't use intrabar data. It's not using at volume. It's not using order flow. It's not using anything. It's literally using movement. And, you know, give me a couple markets that you guys like to trade. Like, I know a lot of you guys trade the S&P. Like, give me the other markets that you guys like to trade. RTY. RTY is a mover, the NASDAQ. Yeah. So, you know, these trending markets can be, like the Russell is a pretty big trending market, man. Like the Russell moves. RTY. NASDAQ, right? You can look at crude oil as a pretty, these are big trending markets, right? The S&P trend's pretty good, but I would argue that those other markets can be pretty big trending as well. Yeah, the NQ will need some breathing room for sure. Right? So how do we want to go about building a foundation for these markets? Jeff, do we have the template for the fractal conversion in here? Did you?
Yeah, I posted it earlier. I can repost it.
I got it here. I got it here. Let's see this. So one of the things that we've done for everybody, and I think this is really useful, is this is free, by the way. It's our way of trying to help you out, figure out the time frames. Like for me, when I look at the S&P and the NASDAQ and the Russell and these markets, this is the Renko settings down here, the Renko and the range settings. So how would we go about building a thesis around this? Well, when you look at the NASDAQ, okay, if I want to trade a 1 minute equivalent on the NASDAQ, it's 40 ticks per minute. We have a statistical tool that converts the time to volatility. So how would we set that up? Well, for me, the 40 is the reversal size. Okay, the 40 is the reversal size. So I would set the NQ, and I'll just do this with you, NQ. And it's the same for the MNQ or the Russell. They're tick for tick movements, right? So I would set it as a 20 tick bar, a 40 tick, so 20 tick bar, 40 tick reversal. And then I always go 80% of the bar type as a starting point. Like it's like 80%. So like if I go 20 ticks times 0.8, you're looking at 16 ticks for the offset. So that would be my Renko setting I would start testing for the NASDAQ. If I was doing the RTY, if I know that the RTY is 9, I could round that to 10 just to make it easier for math. It almost makes sense to do that. And these are all linked. So I can just do this and put this to 10, 5, and 10. Right? Gold is a unique flower. It does what it does. It's really weird in terms of data, but I would arguably think that you could probably keep it at a 10 as well, just for the sake of it. You know, gold, I think the data that we ran on that test didn't come back the way we should have, but either way, I would probably put this as like a 10 and that kind of thing, but you guys can do that test after. So let's run this. If it's a 10 tick bar, then I would run the Russell, okay, on a 5 tick, right? 10, 4, 5 tick, and then 10 reversal, and then 4 offset. Now, that might be a bit small, but it's a trending market. So if we look at that, let's take a look. It's going to pull some data here. So let's just pull it up here, guys. I'm going to show you the Russell. Let's pull it up. You guys learning things? You guys enjoy these sessions? I want to make sure that you're coming here and you're getting an understanding. Five tick bar. Give it a sec here. That's the Russell. So I'm running an optimization, so just bear with me. My computer will always run a little bit slower until that optimization is done, but it'll load that data. So if I want to add an indicator to this now the Russell is a small cap index, right? So it moves when the market moves, right? And as is anything, but let's add the indicator here for a second. Now let's take a look at the settings. Okay. And once we finish this test sample on the break trade, we're going to do a retest template together. So I'm going to put it at like a 7 for a second. I like the 7. You can optimize for 7, depends on it. The 7 is big setting. So you need to be mindful of when that'll work in your favor versus when it won't. I always set it to 50. This band ATR multiplier, I just set it to 50 to smooth it out. It has nothing to do with the size of it. It's just the smoothing factor. And let's just leave it at that. So take a look here, right? Now, this may not be the right band setting for, but look at the way in which it runs the breaks here. Like from a retest perspective, it may not be the right setting for the retest, but for the break setting, take a look here. You see these little chop and slops? This is what you need to be mindful about that's why we run the test, because my job when I want to build the algo template properly is I don't want that. That is not a good thing for us. So we want as smooth as possible. So this to me could be basically factored out, baby, by setting it to slightly bigger on that. We could maybe put it to, take a look here of like a 7.5. Let's just take a look at what that looks like. Right, and you can optimize for these settings just to show you a little bit. Let's put it at 8. There it is. So when you take a look at that, you can see that, and you can see the setting there, right? And you can see like why you want to play with that why we test for that. But look at the runs on the Russell. Like, this is where if you are trading for an end of day prop firm, because they do have them, this would be a template that you could really throttle. Okay, now, like I said, the scalp templates will be great for you guys right out the gates with what we're doing, but we're going to post some of these templates. I'm going to run some tests for you guys, and I'll give those templates for you once we finish them. We'll keep this off to the side, so I don't have to rebuild it. Let's take a look here. There we go. All right, let's minimize that down. Looks like we came back. Houston, we have a winner. Perfect. So what we've got now, if you take a look at the data, so over a couple weeks of trading, okay, 1.677, 4,000, 1.677. I can sort by profit factor, or I could sort by net profit, and it's the same. My highest profit is 48, and my next one is 44. And if I sort by profit factor, that actually tends out to be the best one. So let's take a look at that template. From a break template perspective, this may be a really great template. Remember, this is not meant for the scalp settings. This is meant for, or this is not meant for the big runs. This is more of a day trade setting. But you can see that these templates are not too, they're not too tight, right? And on a range bound day, you're not going to have that follow through. Yesterday was a range bound day. That was yesterday. The day before that, right, you get the follow through, and these are that. Now, why am I showing you how to test this? Sean, max drawdown is 1 trader total. Max drawdown is total drawdown. That's your total drawdown. So when you want to look at performance settings here, one of the things that I like to do here is look at your max risk per trade. If you can stomach $200 per trade, well, then you could add size. Okay. Now, like I said before, this is just me showing you how to run different tests. This is not necessarily the template I would want to run. In fact, I have a template that I want to run. This is a break template. And for me personally, I would only want to trade break templates for, like, I would really want to optimize different break templates for big runs if I was trading on high volatility days. Okay. So would it be safe to say that we should focus majority of our time on the scalp templates, and then for fun later, when you have good scalp templates, then focus on the big runs? How many of you guys would agree that that's a pretty good starting point? Exactly. Okay. So I have the scalp templates built for the S&P. I don't have them built for the other markets yet, and I can do them. I'll help you guys build it. Okay, so this is break. Let me just kind of move this up here for a second. This is just to show you an example of how to do the break template testing. Okay, and let's show you how to do the retest. Now, this is already the retest back test template that I have here that was provided for all the members. Why? Because I spent a lot of time building this template on the S&P, right? So since I have a really good one for the S&P, give me a market. Pick one market. NASDAQ. NASDAQ is what I have data for. So I think I have data for it. I think it's probably better I do a market that I have data. I don't want to bite off something I can't choose. So let's do here. NQ. MNQ or NASDAQ? NQ, I would say the MNQ is going to be better. MNQ. There it is. So I have data for 6. Yeah, I have it. So I just want to make sure. May. I've got enough data for this, and I've got enough data for this, and I've got enough data for April. I could run the test in May and April. So let's do this. Let's do the NASDAQ. Let's set up an optimization for the NASDAQ, and then let's start building NQ. Crackhead. What do you mean crackhead? What's that? It's the better market. Everybody's trading it. NQ is going to be too much risk for everybody. Yeah, it is crazy. The NQ is a high volatility. Absolutely. So let's go in here. Optimization. And I'm already going to walk you through this so that you guys understand it. Because this is where I think everybody's learning curve is. And this is what Friday's workshop is going to be. Friday's workshop is going to be on the engine testing. I just want to make sure you understand how I go about doing it. So let's go here and optimize. There we go. We're going to turn these break signals off because I'm now going to test for retest. I'm going to show you how to do a retest signal, and we'll do the NQ. True. We can test 3 or 5, how many ever you want, but I would argue that, you know, you're going to have one retest up to a maximum of 3. Okay, the ATR period is always going to be, you could do 14 or you can do 10. I think the default on the indicator is 10. So we'll leave it at 10. The other one I had it at 14, but we can leave it at 10. That's fine. The ATR multiplier, I'm going to put it at 3 and we're going to put it at 7. Okay. And this requires the band. So you do need the band. The ATR, I always set the band to 50. It just smooths it out. It has nothing to do with changing the thickness of it. It just makes it smoother to read on the chart. And the ATR multiplier, this is important. And we can run this by setting it to 1 to 3. You could do it to 3 if you want. It's just from a retest perspective, normally 1 to 2 is good, but you could do 3 if you choose to. Now for quantity, this is the, is this the NQ? No, this is, yeah, we'll do the NQ. So we might want to go in with, like, how many contracts does most people trade on the NQ? 5, 10, it just depends on the stop size, really. Let's just say 5 contracts. We may want to go down or less, just depends. Right? We don't know that data yet until we run a test, until we know that and we can run with it. So let's go here to the stop losses. Now, here's an example of, this is why I really like the idea of using ATR sometimes if you are using a really high tick market. So let me explain that. If you're trading a market like the NASDAQ versus the S&P, there's a whole lot more ticks in the NASDAQ. So if you're optimizing for tick stops and targets and you're doing like increments of 2 and 3, you're going to have a whole lot more iterations, right? If you think about that. Now, it's not one is right or the other. It's that normally you just need to think about what is it doing and how can that speed up my testing time. So if I set the ATR to my stop loss to ATR, remember that the reversal size is 40. Okay. So if I do that, then it's going to be a factor of that reversal size as an ATR. So let's do this. Stop loss minimum 1 ATR to, let's say, 3 ATR. You know, I'm basically, my stop loss is going to be 1 up to 3 times the ATR. Right? And let's do it in increments of 0.5. Okay, 0.5. Okay. And then what we'll do is we'll come down here to the targets. And let's say I want to set my targets to be a risk reward, not an ATR. So let's do a risk reward. And let's set up the setting here. And let's say I want to do 0.25 all the way up to 2 to 1, right? Because remember, we're trying to build a scalp template. So even a 1 to 1 would probably be less iterations. Wouldn't you make sense? Like if you're not trying to swing for the fences, a 1 to 1 R multiple is a pretty big trade in terms of a scalper, right? So let's just go to a 1 and let's do an increment of 0.25. This is how I would really kind of factor that down. Make sense? And we're going to start it off in the morning. My time is 5 a.m. pre-market, which is 8 a.m. And I tried to design these AMAs to be a little bit of a hand-holding nature so that you guys can watch me do this step by step. Do you like me breaking it down like that? Like, it's one thing to say, here's a template, but walk you through my process. Because a lot of people have asked for help in testing. Like, they don't understand how to run the tests, or they don't understand how to set the templates up. So exit at the end time. Okay. Now, money management, we're not going to test. We're not going to do the moving averages. We're not going to test momentum. We can get into that after, and I'll talk about that. Okay, here we go. And we're going to run the MNQ. And let's take a look here. Now, remember, the NASDAQ is a 20-tick bar, 40-tick reversal, 16-tick offset. Make sense? We're going to run the template here to yesterday and to prior week, because I think there's not as many iterations.
John, that's 3 months.
Yeah, I'm going to fix it. Geez, like the voice of God scared me there.
Sorry.
It's all good, brother. Let's go into May and let's do that. Perfect. So we're going to just do a week of data up to yesterday. I don't have data downloaded for now you can do this. Let me explain this. You can do max profit factor if you're trying to find max profit. Like, there's no right or wrong here, and this is really kind of like a preference. Like, it just depends. You could do max profit factor, and let's do this one on max profit factor. We did the other one for net profit, and it just goes to show you that you can still sort the same way. Exit on close, and let's do the template here. And let's run this too. I renamed that template wrong, by the way. I'm gonna have to set that up in a second. So there's 20, 40, 16, retest AMA, and we'll save it. So let's try this, and let's run that. See how many iterations we get. Might be a bit much. Going to cancel that. That's a bit much on the NQ. Let's cut those iterations down before it runs the data. On the NQ, that's a lot, just for such a short period of time. So we'll give it a second here. So where can I cut it down? So max retests, I can do 3. I could do maybe just set it as a band multiplier. Let's just set them the targets for stops and targets. We'll set this to 2 times the ATR. And let's go to targets. Let's try that. Let's try that. Let's see how many, let's see how long it takes. If it takes a bit longer, we'll pull that down. Now, while we're waiting for this to run, okay, we'll see how long it takes. If it takes too long, then we'll kill it. We'll do something a little bit smaller. No, that's going to take too long. You never know, right? These sometimes they kick in and they start going real fast and then they slow down, but I'm gonna abort that bad boy down. While I'm doing this, type in your questions. What do you need help with? What do you feel that you need the most attention on the training? Where can we steer the next AMA and the community chat rooms to assist you in the best of the best? Talk to me while I'm building this up, building templates. So exactly what we're doing right now. Okay, well, that's, I'm going to wait for it to come down. And okay, so what I'm going to do is, let's say minimum max retest 2. Let's just test Well, let's try 2. Like, let's say we want to do 2 retests, and maybe we'll test 2 to 3. Okay. And let's do stop loss, 1 ATR, 0.5 ATR. Let's just do an iteration of 1. That's a great, let's just do this to 1, and let's set this up here. So 1 ATR, and let's do targets it like that. That should be a lot faster. Well, I truly believe that you need a template for scalping. Like, there's no question about it, because the scalp template can work in high volatility and low volatility days. Let's try this. That's goes without saying. Yeah. So let's try that. And I have the scalp template. So this scalp template here is already built. Okay. And this shouldn't take too long. Minimum retest equal to. No, the minimum retest is oh, that's a good question, Mark. I didn't catch that. Let me just double check that. Jeff, maybe you can chime in on that. Minimum retest set to 2, which means it'll automatically take 1 or 2, Jeff, or if we need to have it set to 1.
It will take anywhere from 2 to 3.
It'll take 1 though. It'll trade 1, or it won't trade 1.
No, it'll allow up to 2 or up to 3. Like
that's what I mean.
Max.
Yeah,
that's the max.
Exactly. Yeah, so it's set up properly. Yeah. Good
Okay.
question. Sometimes it gets your brain thinking, eh, Steve? It makes you think on, did I set that right? But can I ask you guys a question? And just realistically, like, tell me where you guys are at in terms of your own, templates and some of the things that you guys may have built before. Give me a sec here. Yeah, we're getting a big influx of data, so I'm gonna can't disconnect from data so that we don't have to worry about that coming in at the same time. There we go. That should help my PC performance. So I'll shut those algos off. That'll give me a little bit better PC computers resources. Really like where this is going, Sean. Yeah, well, and I can't wait to share with you some of the other stuff, but I just want to ask you guys' opinion on whether you feel that the stats here are solid. Like, if you were to look at this template, what stands out to you? I'm just trying to get where you guys' brains at in terms of like where your mind goes. Like, I want to know where when you're looking at this template, what's the first thing that stands out to you? Is it the profit? Is it the win rate? Is it the R multiple? Is the average trade expectancy? Net profit to max drawdown? Yeah. Low drawdown? Yeah. Yeah. Okay. Recovery, profit. So I want to kind of talk a little bit about some things that you should be paying attention to, because, like when we post templates, we often get traders will make a comment saying, well, I can't trade for that R multiple. Average losing trade. Well, that's because I'm trading 2 contracts. So if you're trading this is 2 lots. So if you're trading 1 lot, that would be half that, right? So I'm just that's a 2 lot back test, right? So it's you can, that'd be down to like less than $300 per trade, right? A couple things that a lot of people don't pay attention to is max time to recovery. So let's talk about that. Why do you think that's important? How many of you guys have started a new round of evals, or you've started a program, and then all of a sudden the first day out, okay, you have a losing day? I wouldn't call you human if you didn't. I think everybody's had that, right? Where, you know, every freaking time, Nikki says, right? Well, if you have a day where you have a losing day right out the gates, what this tells you is that you can pull yourself out of that drawdown at a maximum right now in less than a week, which means, you know, if you start seeing this start creeping up over 5, 6, 7 days, it may just be because you have such a huge sample size you're working with, or, okay, or your template's garbage. Okay. So I like when it's less than 5 days. These are things that I pay attention to. I also want to make sure that I have enough trades every day. Okay. I'm not so concerned about the R multiple when I know that the ratio to win percentage is massively in favor of that R multiple. Okay. I also pay attention to consecutive wins to losses. Okay. Because these are, you know, these are important. Like if I would have seen maybe 16 winning trades and then 6 losing trades in a row, that to me is that's not okay. You can't have that when you have an R multiple that is less than a 0.5. Like you don't want that. So it's not about one trader is better than another, or, you know, one template's better than the other. It's about understanding what the data is telling you. Another thing I want to point out with regards to looking at your reports when you're doing the back tests, okay, is it's not so much of like, yes, an equity curve looks so great. Like everybody loves the equity curve, right? Like everybody wants to see that goes straight up, no problem. Come on, give me that. I can't let me touch it. Sometimes that doesn't work in my favor. Let's go here to this. So let's go into the summary and breakdown of time a day, half hour per day. I want you guys to like set this to entry time, not exit time. I want it to be set to entry time, because that's going to tell you when you're getting into the trades, not when the trades are closing. You really want to set these to entry time. So that way, you know that the system is providing you the right testing results for based off when you got into the trade, not when you got out of the trade. Okay, because you don't want to be checking the time. And it also tells you that, you know, consistently in the morning, it's produced throughout the entire, you know, maybe not having to trade until 8 o'clock. You don't even need to go to that time. Okay. And another thing you want to pay attention to is if I go into the money management on this template now, let's pull down here. There we go. And daily. It's just because I'm running an optimization, right? Now what I'm going to do is I'm going to take a look at the net profit. So when you have a good template like this, then is when you move to money management. Okay, when you have a really solid scalp template, you move to money management. And I'll explain why. Because when you have a rock solid template, that's when you can start optimizing for the money management. How do we optimize for it? I like to look for confluence in the highs and the lows of the data. This is an outlier. So you can't run a money management template on an outlier. Why? Because it doesn't happen all the time. Take the mulligan. That's the grand slam hit, right? Remember, that's the winning, that's the base hit, base hit, base hit, and then there's the grand slam, right? And those help, right? So when you look at that push up, where is the confluence across all of this? Right here. You had 3 days that hit $600. Okay. You had 2 days that hit 1,000, right? Here you had 4 days that hit 600. You had 3 days that hit 1,000. Here you had 1, 2, 3, 4 days that hit 600. You had 2 days that hit 1,200, and here you hit 600, right? Well, the week hasn't started, right? And yesterday was a win, and today's a win as well. So think about this, like, where do you see the confluence across the money management? Anybody here want to add to that? Where do you see that confluence? 600. 600 is like your foundation because it's hitting it on a regular basis. Remember, if you're running a business, you want to throttle what's happening all the time. Does that make sense? You need that baseline. And so this is where you would basically set your goals. You can start building a baseline around how do you want to set your money management setups, where you basically say, okay, your max. I personally don't trade for a max goal, and I'll tell you why. When it comes to quant trading, if the market just keeps giving you paychecks, and the market just keeps giving you paychecks, why do you want to stop taking them? A discretionary trader is different because you're on the hook for that management. You're on the hook for the decision, pulling the trigger, executing your analysis. An algorithm is doing that for you. It's already designed to do it. So wouldn't it make sense for you to have a high watermark trigger based off that baseline so that you lock in those gains? But if the market just keeps rewarding your upside, you're not going to stop the algo from paying you? If you have a daily goal, well, then you cut down those days where you could have if I had a daily goal of 600, or if I had a daily goal of 1,000, then I would never have been able to achieve that opportunity. You see where I'm going with this? Like sometimes people don't think like that because it's just, sometimes having an outside voice give a little bit of experience there. I would basically think of setting, put a high watermark. Okay. I would look to set my high watermark of, 600. Okay. Because I know that's my baseline. So my high watermark is activated at 600. That doesn't mean I'm telling it to stop trading. It means that's when my money management is going to be engaged. And how do I determine my watermark percentage? Well, I don't want to give back 50% of my profits. Like I'm not so tight. Like I'll take a losing trade while still being able to keep trading again, as long as I'm not giving back more than 50% of my profit. Now you can optimize for that. You can optimize for the high watermark percentage, but even if you're not optimizing for that, it's a good foundation of not giving all the money back to the market. Like end positive, no matter at all costs. Now, how do we dictate your max loss? You go down here to your drawdown, your max drawdowns. Perfect. Well, if you look here, I don't have any other, I don't even know why it's done that. Is there an issue there, Jeff? Exit time? Nothing there. I think it's just the way it is. I think there's a confluence at 540. So then you could basically, there was nothing above 540. Well, because there's such a high win rate, 92%, that's right. So if you know that 540 was your max drawdown, maybe putting it at, 600 would be your max drawdown. How do you know what that would be? Well, that's your average losing trade is 481. That'd be 1.5 trades. That doesn't make sense with this position sizing. With this position sizing, it doesn't make sense to do that. I'm trading 2 contracts. I would drop it down to 1 contract. Make sense? So these are little things that we're going to do in the next major testing, because I think what a lot of people don't know how to do is test the money management really properly, and we can get into that. But let's take a look at the sample size here for the NQ, because I've never tested the NQ yet. Never even looked at it. Never even looked at it. So these are the, and I believe that we're going too liberal. I would rather be a little bit more granular in my testing, because I normally do these on a different computer. But let's take a look here. We're optimizing for profit factor. Okay, 1.46. Jesus Christ, 340 trades. It's a bit much. Okay, it's a little bit much. 340 trades. It's a bit big. Let's take a look here. Now remember, we're it's the whole day, so we can cut down time of day. I just want to see the sample size on that and profit factor drawdown. Let's take a look here for a second. Okay. Now don't get excited because it's got some winning days here. What I want to do is I want to go in here and I want to take a look at the chart. Okay. Yeah, these are scalp templates. So it's you're trading with 0.2 R multiple, 87. Okay. But I want to take a look at the time of day. And if you look, entry, right? Like the morning, is where you make the majority of your money, except for the close. Now, why? Because the NASDAQ normally has sometimes an end of day push. So I would just look at running an optimization for the morning, which is when most of the people are trading. And I wouldn't even trade at 8:30. Like it's like there's no need to trade into the European close. That's what that is. That's the European close. Yeah, commissions are included. Yeah. Now remember, this is just a very liberal sample size. Like I would literally now go down and take a look at, it's telling me 2 retests. So take a 2 and I'll always optimize more for that. And stop loss is a 2 ATR. Makes sense, right? We could basically do a 2 ATR. Let's just try 2 ATR and let's just optimize for the band. Yeah, I actually have a back test on a time chart. I'll upload the template for you free of charge, Ron. I actually back tested it on a 15-minute chart. Big look backs, 4 or 5 months, and came back quite surprising. Actually, it was pretty unique. It's a bigger time frame. I'll send it in the chat room for everybody today. It's on my other computer. Yeah, I'll give it to you guys, no problem. So take a look at this. Like if I'm at 2 ATRs, and let's do that. So if I want to run that, I'd change the time down to this. I would go to 8. And then I would run it for a bigger sample size. I would go back another week. I've cut my iterations down drastically. And I would just go back another week and do that data. Does that make sense? So I'll put these templates in the chat rooms for everybody, you know, so I don't want to take everybody's time. It's been a pretty big AMA, but did you guys learn something from this? Like one of the things I want you to know is that I've already built the templates. So if you take a look, I've got strategy templates. I'll put the AMA templates here. This is actually a break template that we tested. But the thing is, I don't like I like distributing templates that I've tested with a lot of time, because I like to lead by example and help you guys. And one thing I'll tell you is that you don't need to try to reinvent this. And we've already done it. So if you look at these launch templates, like this retest template is amazing. Like this is like, I'm proud of this template right here. It's really good. Very, very, very good. I'd like to test a Russell template. I'd like to test a NASDAQ template, and the retest templates are very, very good. This template is what we gave in the event. It's what you're seeing here for the profit factor of 3.45. That's not even including today. It would be much better with today, but we'll give those to you guys. Okay, we'll give those to you guys. So what I'm going to do is I'm going to pull this up one last time. We ran that retest template out of sample. So one of the things that you asked about was in sample versus out of sample. Take a look at this. I ran an out of sample test. Right? What you're seeing now is just this template all the way up to the middle of April. But what I did was I extended it in an out of sample test. I optimized and then I ran it out of sample, which means I took an optimized template and then I applied it to random data without optimizing stops or targets. And I wanted to see how well it was performing. And if you take a look, I did an out of sample data in the past, and now we have traders running that template in the future, and they're doing very good with it, very well today, right? It's proving to be very, very solid. So can you consider live sim for 1 month, 2 markets and optimization daily? I don't think you need to optimize every day. I think that's a little bit aggressive. Maybe maximum at the end of every Friday would be a really, really good foundation. Like run your template over a new optimized stops and targets, and just because conditions change a bit, but I don't think they change enough for you to have to optimize every day. Yeah. No, I don't run tests on timelines, I run it on number of trade sample size. So like if I look at the S&P contract template, like that's 140 trades. That's well enough for me to be sufficient as a scalper. Like that's a lot of data. The reason everybody thinks they need a large sample size is because they were taught by monkeys that don't know what the hell they're talking about. I'm going to tell you right now that anybody that sits there and tries to tell me that a scalper needs to be looking at months and months of backtesting data from like a quarter ago, I'm going to challenge you to say, what's the point? What's happening 4 months ago has no bearing on what's happening over the last couple of weeks. Intraday volatility is intraday volatility. Now, if you're a swing trader or if you're somebody trading over bigger time frames, the reason you need to go back over larger sets of time data is because you need more trade activity. You need more sample size to validate. 100 trades is a lot of trades. It's a lot of trades, right? As a day trader, that's extreme. Okay. So what I want to do is I want to let you know that we've ran out of sample testing, and it's done very, very well. Okay. The same template, right? The exact same template that I have pulled here for the one that, right, you look at the analysis and you look at the net profit. So I would look at confluence and I would basically set this to daily. So look, like you can see the net profit. There's confluence across 390. There's confluence across 300 here. And for drawdown, right, there's confluence across 240. I would basically look for setting your drawdowns and your trailing, your target high watermarks to those factors. Yeah. Another trader posting another break trade scalp winner. Right? Good day today. Yeah. Really good day today. So I want to thank you guys for being here. If you have 2 computers, the software is good on 2 computers, right? If you need help installing it, or if you need any help with dev or any issues or anything like that, just let us know. We got a team to help you with. And I'm going to open up the chat room for questions now. So let's do this. Link for Friday. Yeah, the link for Friday, Jeff, do we have that here?
Let me find that. An email will go out. So
yeah, no, that's no problem.
Let me see if I can find a link.
So guys, I'm a just kind of put it on the table kind of guy. And one of the things I like to always do is I have a team, right? My team asks me to kind of give them some insight as to how much exposure we need for support, right? We've got a lot of customers on a lot of different products with a few different brands. And so when we do these big product launches, we have usually a large influx of people getting new products, which means we normally have a lot of support tickets and, you know, these types of things. So one of the things I like to do is I just like to get a temp check. I like to get a temp check on, you know, if you guys are planning on purchasing the algo, because I want to basically let my support know how many tickets they should be expecting for installs and how many support, you know, emails are going to be going out and stuff like this. So like, I know a lot of you guys already bought yesterday, but there's a lot of you that were waiting for today. Today, they absolutely did amazing in the trade room or in the chat rooms with the algos today. But I know a lot of you guys have questions and you need help. That's why these AMAs are here. Just let us know, right? Like, but let me know if you're planning on buying, because I need to let Mr. Ben and Jeff know what to expect on installs and licensing and basically email support and just follow up, right? If you missed yesterday's webinar, we'll send you, yeah, we'll send you all that. Yeah, Ron, we'll never send you that. None of my teams are traders. They're all dev guys. Yeah. So it's kind of like asking you to, if you want to buy a car, asking the guy that built the engine to drive it for you. Yeah. Yeah. We have guys trading it live in real time in our chat rooms. You can ask them. Yeah, if you want, we provide all the back testing performance and the optimized templates and stuff, but we're the second largest development company in the world on NinjaTrader. Like in the world, over 500 companies. Our focus isn't sitting there just trading all day. Like we have 20 products in queue across 3 different companies. Yeah. If you want to see somebody trade live in front of you, you can join our trading rooms. But if you want to come in and use the products, just come into the chat rooms, ask the other traders that are trading it live. We've got lots of them. Yeah, your question's valid, but it's not my team's responsibility. My guys are developers. Yeah. And Ashley doesn't trade. She does websites. So that being said, there are a lot of live traders trading the algos, and there's a lot of algo traders trading different algos. So my suggestion, great questions, by the way, Ron, because you're not wrong for saying that. Go into the ARC chats. Really good place to be. And we have a main thread for algos. Let me just grab this is a free chat room. You can chime in and trust me, you'll be treated well by everybody in here. Anybody in here willing to give Ron or anyone else a lending hand that's in the chat rooms, if they have questions, just type them in. Everyone will help, right? Everybody's here for you guys. Yeah. And what we'll do is we'll bring you into the chat rooms, and you can come in and you can join the algo chat room. They're free. Then all of these are the algos, different automated systems. So what you've done here is we've got the hybrid, the delta, the trend stepper, the VWAPper, the volume divergence. And today we're talking about this algorithm, this automated bot. So if you go in here, that's why these were all posted this morning from people trading it live on their prop firm accounts, in Rhythmic, on Apex, right? These guys are trading. We just launched this yesterday. These guys are already trading it live. So if you guys are interested in talking to some of the other traders that are using it, absolutely. Same with the other templates. Like, we've got a lot of different systems running. Okay. So it's a good place to be. Yeah. And if you want the Discord link, it's on our website, I think, Jeff? So many links.
Yeah, should be.
Yeah. Or send an email in. We'll send it to you. It's in the members area. Yeah. Can you provide updated templates each week till we learn how we're doing it correctly? Yeah, absolutely. Will it work with 10 funded accounts or more? Any challenges? That's why you trade liquid markets, Bradley, mainly because you want to be able to get in. And we're not, like, if you look at this, let me just pull this up here for a second. I'll run some templates on the Russell and the NASDAQ for you guys and put in some extra work. Yeah, we do kind of optimize for each other, but like, I'll give you an example, right? If you're entering on, let's take a look here, connections, let's just pull this up. Like, let me just run today's testings for today and take a look at this. Yeah, slippage is a great question. Well, trade copying is trade copying. You got to deal with replicant. And just by the way, guys, this is not a slam against Apex, but if you really want to be able to trust your order execution, don't use the Apex trade copiers. I'm not trying to steer business away from Daryl and the guys. They're a great team over there. I have a lot of respect for them. I just don't think their product is kept up to date. And for that reason alone, I can't endorse it, right? I cannot endorse something that I do not, that I can't get behind, that kind of thing, right? So let me just go into the strategies. I want to show you something here for a second. Sometimes I get these last minute ideas that come to mind. And let's just turn on the time today all the way up to current time and combined. All right, it's on sim. Okay, it's on a sim account. That's fine. So if you're running a trade copy, okay, like, you don't know, you need to trade full, like, right? So it's in a trade now, like there's a trade live now. Jesus, doesn't get any better than that. So when you look at these types of trades, right? Like the S&P, it trades through these by several ticks. I mean, the only time you would ever not get filled is if it hit it to the tick and it didn't trade through, and you're maybe trading with a certain amount of size, but I don't think you're gonna have an issue, right? Right, there's a target. Oh. So that was a target. I think I don't know why it just filled there, but either way, the whole point is that if you're dealing with these types of trades, no, you're not going to have any issues with that. Now, if you're trading with multiple accounts on Replicanto's trade copiers, you got to use the mindset of understanding that when you trade multiple accounts, right, you have to be willing to you have to be willing to understand how to manage your account. It's not even about the algo, it's about proper account management. Okay. So please explain the oscillator at the bottom. Yeah, this is a hybrid momentum tool we use, right? This is it's two different types of momentum oscillators, slow momentum and fast momentum. So this has no bearing. Actually, this isn't even being used in it right now. So you could even turn it off. It's not even being used in it. The only time this would be being used is if you turn those filters on. Yeah. Now, Jeff, that's a good question. And when is the close? Is the close happening now? No, the close isn't happening in
about an hour.
Yeah, we got lots of time. So when we're not using this, Jeff, do they need to have it visually on? Like, it's just taking up screen real estate, right? Is there not a way for us to just turn these off? Or is it
we
just...
don't have a way to hide it in terms of the settings.
What you can do is you can just do this.
Make the panel smaller. Yeah.
Just do that. You don't even need it because it's not being used in this setting unless you're using momentum filters, right? Yeah. But one of the things that you would want to be paying attention to for those of you that are trading for the prop firm account is, let's just go back to today for a second. Okay, I want to talk to you a little bit about good trading versus bad trading. Okay, the algo did very good today. Why? Because it made money, but it didn't do very good in certain periods of time. What do you mean? Well, take a look at this. If you run the algo in the morning like we set it to, what ended up happening? It went from $0 to $1,400. And if you have a high watermark of 50%, okay, it came down to 50 here. You gave back 50% of your profit right there. I know traders. Yeah. That's a lot on 2 lots. Yeah, exactly, Brad. But remember, that's 2 trades, 1, 2 trades, 2 trades, 2, 4, 5, 6, 7, 8 trades to make $1,400 and then give it back 50%. Right? Here's the thing, right? This market started going against you here, right? At 25% of your pullback. You could have easily killed this day with $1,000 profit before any of that happened. Right? And then all of a sudden it came all the way back up again. And it's back up to 1,600. So that's the difference between money management and just letting it ride. Okay. So this is why I truly believe, like, I know guys that'll come in just in the afternoon, but they didn't have the opportunity to trade in the morning. So they have to trade in the afternoon, right? Vice versa, right? These types of things. Take a look at yesterday. Yesterday, when the template was on, look, you could have had money management. No, these are 5 a.m. is my time, is 8 a.m. Eastern. I'm 3 hours earlier than Eastern. So whatever that is, Central, I don't know. But take a look at this. As a scalping template, take a look at yesterday's trade performance. It went from $0 at 5 in the morning. That's pre-market. There's the green starting line. Scalp the shorts. Long, long, short, long, long, short, long, long, short, long. Now, if you're using money management, okay, depending on how tight your high water mark was on the setting, you could have set it to, let's say you make $1,000 or 600, like there was that confluence. Remember we talked about 600. So after you made $600 right here, 50% would have been 300. And then after you make up to 1,000, 50% would have been 500. So you might have even said, well, I'm only going to trade 25%. If you traded 25% pull down on your high water mark, you would have stopped trading right here. And this is why our algos are so badass, because you can go into the engine and you can tell it to give you a pop-up signal. I don't know if Jeff's working on a better solution on that. I've got guys working on money management. And you can basically go in and you can tell it to do that. You can basically say, okay, let's go to money management. Where are we here? Right here. And I could easily go in and I can set my high water mark and my daily max loss for the day and let it rock and roll. And I always want to give myself at least 2 to 3 trades. I like to give myself 2 to 3 trades, because what happens if the first trade is a losing trade out the gates? You need to be able to trade out of it and into the win. So I normally want to make sure that my average risk and my high watermark money management settings do not kill me after one trade, right? So I think I've covered a ton, but this is the retest templates on the S&P. Yeah, this is the retest templates. Okay. So I had a question here. Is what is your best algo? I would like to let the community tell you that, and based off results right now, based off what everybody's doing in terms of numbers, let me pull it here. I would hands down say that, well, the ATR just went live yesterday, so I don't have enough data for that. Look at that, win on a range scalp. People are loving it. I would argue that these two are the winners right now in terms of what I've seen from testing. I'll tell you my ranking. This is my personal opinion. This is not based off of what others are doing. I know other people have done some pretty amazing things that I haven't done. Number one right now, based off data, is the hybrid, mainly because it has a lot of data behind it. Right now, the ATRVol is, and then this one would be the VD Algo. And the only time I would really look to trade VD Algo is on high volatility days. Movement days. You need movement for that market. Now, if you were to ask me, is one better? These two are going to fight for the win right now, just based off what I've seen for testing, until the other stuff that we release is coming out. Like, I've got some pretty amazing things, but honestly, the ATRVol, from a scalping perspective, you're going to get more trade activity in the ATRVol. Okay. Rick says, can I get a deal if, yeah, you can send an email in. Yeah. Yeah. We had a promo last week for that, and this launch, so we can open up a promo for last week for you as well. Yeah. So anybody that wants both those algos, I'm not trying to sit there and do some big sales pitch here, guys. We ran a promo, and last week, if you didn't buy on that promo, we'll extend that promo. And we had a promo last week that was insane. And it's all of the algos for the price of one, but we don't do that for new launches. So ultimately, we can, if anybody wanted the hybrid, we can extend last week's promo for all of these. Plus, you'd need to get the hybrid. You need to get the new algo. Yeah. Yeah. Sean, I have 8 templates running now, testing, no more for a while. Okay. Hey, Nikki, no problem. So guys, if you're to ask me, like, you know, that's kind of a great way to end the day, guys. I hope that you enjoyed it. And I hope you find value in what we do. And we really bust our ass over here trying to get you some really great things. And yeah, you can just send an email into, can we get the offer in the chat? You just need to send the email to buy, Glenn, for what, this new algo or the last week's algo? I'm trying to understand which one you're referring to. Last week, you need to send an email in. That's been closed down. So if you missed last week's all-in-one algo promo, yeah, Rick, same for you. For those of you that want all of last week's all-in-one algo promo, can you do me a favor and just send an email to Sean at NS? Actually, yeah, I'm going to put it in here. Give me a second. I'm going to get you to send it to Jim. One second here, guys. 1 second. I'm just going to see if Jim Simmons is here, if he can come in. Jeff, can you take Jim Simmons' email and put it in the chat box for me, please?
Yep, I'm on it.
I just want to make sure that they can send the right people, email to the right people. So Jim Simmons is my head of sales and education, and he's the guy to be able to open up those algo weeks for you, and Ashley too. So I would arguably CC an email to Jim and Ashley simultaneously, add them both to the thread and say, Sean opened up the algo week for last week. And you won't be able to extend algo week to the new algo because we never do that for new product launches. We need to pay for the development, but at the end of the day, we can definitely extend on the deals for last week. Yeah. Yeah. So send an email to Jim at nstradingacademy.com. It's in the chat box, and let him know that you want to buy the algo week from last week, plus get the launch deal for this algo, and he'll send you the links for that. Give me a yes that this is a win-win for you guys. You guys enjoyed it. Want more of them. Hope you found this to be informative. Super excited to see you guys crush it. Make sure those of you that are not in the Discord get involved, guys. It's an amazing community. It's an amazing community. Yeah. Yeah, we'll continue with these. Okay, so here's I'm going to turn off the recording, and I'm going to ask everybody in here as a side note. Okay, so guys, I'm going to shut the recording off. Give me 1 second.